Welcome back. You're still tuned into Business Lunch on CNBC TV18, and we have been telling you that the entire consumption pack is really buzzing around today. So let's talk about a few of those stocks. Nestle PLC, the parent of Nestle's India arm, has raised its revenue growth guidance once again. So Mangalam is here to tell us more about that. Mangalam.
Well, it seems like the world is going to consume a lot more, and that's the word coming in from the Nestle global parent, Nestle PLC itself. They've raised their revenue guidance for this year in quick succession. In fact, at the end of the third quarter results itself, they had raised it to 8%, and now they've upped that range from 8 to 8.5 odd percent. But remember, this is for global Nestle sales. For India itself, it is understandable that their sales are going to outdo, because the first 9 months of this year itself, the Nestle company, the Nestle management follows the calendar year. So for the first 9 months of this year itself, they've managed to do about 15% in terms of revenue growth in the domestic business. And importantly, the global parent has been saying that India's growth will be outsized. But as a whole, for the Nestle, Indian business accounts for sub 5% of sales and profitability. So the fact that they've raised their overall growth guidance for the company may not necessarily mean that India will outperform any more than it is doing right now. And as a result, the stock which is doing well, it's a function of all the other FMCG stocks doing well today, and not particularly because of this comment. In terms of valuation, Nestle is the most expensive in the consumer pack, with upwards of 62 times 1 year forward earnings. So let's see where it goes from here. But for now, this is positive news from a global standpoint.
All right, positive news coming in, and Nestle is also